Good afternoon, traders. This is Christian from Market Trade Group, and it is Tuesday, April 20th. There is a disclaimer in front of you. Everything that we're going through is for information purposes only, not giving any advice or recommendations. This video is for education purposes only. So, theme of the day, short-term trend finally breaks after being overbought in both the S&P, definitely in the S&P and a little bit in the Nasdaq. Mostly last week, we talked about that probably in 3 or 4 of last week's videos about how the S&P RSI was over 70, and we continue to get more and more overbought, and we finally broke with a couple things. Somebody asked me today, who just is not watching the market every day, they're like, why is the market down? Can you give me a couple of reasons why the market is down today? And my response was, well, number one, we got super overbought. Number two, there is this seasonality. Funny, because I had talked about this last week, and now I see a lot more people talking about it. But yes, the first half of the month is on average for 2020. Let me make sure I'm saying this right. For 2021, I calculated this over here. I even put it in the spreadsheet yesterday. First half of the month for S&P so far in 2021 is up 4%. The second half, which I did not include April yet, but January, February, March, down about 1.4%. So there is this seasonality. I'm not 100% sure if it's because of, once we get past monthly option expiration, which also kind of just coincides with getting through that first half of the year. So right now we're living up to. So that's number two, is that we have this weak seasonality in the second part of the months in 2021. Number three, I would say, we started to see some divergence in the Nasdaq last week. Right, so if you're a regular viewer of my video, you know what I'm talking about. Right, we saw the advanced decline line start to break lower, while the price for the Qs kept going higher. So if you want to look at that, don't worry, we'll talk about Netflix in just a second. Let's go advanced decline line, just so that you know what I'm talking about, in case it's the first time that you're watching one of my videos. But we saw this, right? This is what's known as a divergence, right? If you look at this with the Qs, right? So again, advanced decline line for Nasdaq. So again, we talked about this one about 3 or 4 times, and you can see that going up. That is called a divergence, right? Always, we want to pay attention to divergences. Those are warning signals. So we got warning signal that the averages were overbought, continue to get overbought last week, more and more so, and then you got a divergence with the Qs. And then the seasonality. I think that's enough reasons. I think there's 3 pretty big reasons. So, there really shouldn't be too much of a surprise that we're starting to kind of move lower. It's just kind of how markets work. Is it particularly painful if you have some trades on and they get hit? Yeah, sure. I didn't get out of 100% of my risk, so I had a down day today. Probably, I've had a really nice April, so this was the worst day for me, even though I have a hedge on too. This was a negative P&L day for me today, because what was particularly interesting that I thought is, if we look at some of the areas that got hit, this is the first time, there's been a lot of areas that have been holding up very well. The home builders, the steel names, the consumer discretionary, retail names have been doing very well. Industrials have been doing very well. Well, those areas of the market, if we kind of look at the performance for the day, and the banks got hit today too. They were down 4%. So that's different. The home builders, they did come back off the lows, but they were down 2.7%. Right? We've been seeing, for the most part, also a divergence between like the low volatility equities, which have continued to go higher, and the more high beta areas of the market. Your growth, your super high growth, that I've been talking about that as well for the last week. Those have been acting poorly for the last, couple weeks. Those have not been participating to the upside. That slice of the market, high growth, has done poorly. We've talked about how if we want to move over, like I said, I'm going to talk about Netflix in just a minute. But this ARK fund that I know everybody is always so enthralled with, stalled out at the top of value and has been moving down. Maybe this kind of comes back and rests at the bottom of value. We'll see. It's at the I actually had some puts on last week that unfortunately expired. That has been the story for the last couple of weeks, is just the underperformance and the high growth. But yeah, to see the home builders come in, so this may turn out to be, and it may just take a little while, a buying opportunity. Also, the materials got hit too. That was a leading group, even though only down 1%. So all in all, right? When we talk about this market action, I know it's always a bit painful when it happens, but this is just kind of normal stuff. To see us get really overbought like this, right? So you're always going to see people come on and talk about how it's more extreme, but we're not even down to the 20-day moving average in the S&P. I hate to tell, if you're super bullish, I hate to say that. That, of course, we could be going down to like 40.66. Next levels to watch, I gave a level to watch in yesterday's video. That was 41.45. We broke through that in the overnight session. Europe was particularly weak this morning, and you could see where we are now. So we've kind of broke. If we zoom out a bit, first thing that should come, that should stand out to you is that this beautiful, nice trend that we were in for all of for all of April and just to the last couple days, we've now broken that, right? We've slid below the short-term moving averages. The price is now below this 200 period moving average where we were way above it. Again, I'm on the 1-hour chart here. So the next line to watch, which is kind of what you have to do at this point, is just say, hey, what are you going to do if this line support breaches? What are you going to do if this line support breaches? And I made some decisions today, and I had mentioned in yesterday's video, I said, hey, if this does not hold, we bounced yesterday, weak bounce at that, made a lower high here, but I said if we breach 41.45, that to me means the short-term uptrend has been has been breached, right? So I reduce risk on that, and unfortunately, when that happens, the day that happens, I'm always down money that day. It's just part of trading, right? And I'm used to it. I don't like it, but I scaled out of some trades on Friday too. But I just thought I saw some interesting setups. So this is just how trading works, guys. Right? You make money. And this is what I did for the heart of April, is made money on this swing, and then I give a little bit of money back. Right now, what I really have to do is try not to do anything kind of stupid and try to pick the bottom here. Right. So things that I will be watching, I like to always give a little bit of a checklist. We're going to run through this video a little bit quicker than normal because we have a member webinar for the Tribeca Trade Group coming up in about a half hour's time. But things that I'm watching. Right, so number one, the VIX got up to 1870, right? So it doesn't have to be tomorrow, but could be sometime this week. Would like to see the VIX kind of chill out a little bit, right? Even though we really haven't had that big of a, this is nothing so far, right? So, but I would like to see this kind of chill out and maybe not go up to 24, 25, but kind of stay right around in here. Number two, I would like to see that support hold that I just mentioned in the S&P, which again for the week is 41.06. And then really what I want to see is a couple of things that are more constructive, right? What we've been seeing the last couple is if we go back to the spreadsheet here, you can see that what's been outperforming is really your most defensive areas of the market. So your gold miners, your REITs, your utilities, your staples, right? What I want to see is something more riskier, like a riskier sector. Biotech actually was flat for the day, so that's not horrible. But something like XBI, which actually was down, the IBB was flat. But I want to see like the XBI lead and go higher, right? That indicates to me risk on and that there's buyers showing up in the market. So either that or it could be the semiconductors. Just something that's not the consumer staples and not utilities, right? So that's what I would be watching for confirmation, right? That really buyers and that it's a little bit better of a tape, right? The more that we see the consumer staples and the utilities continue to lead, that, in my opinion, that we're in a risk-off market, okay? So those are some of the things for confirmation. Again, I always have these little checklists to run through every time that we get a little bit of market volatility, all right? And I mentioned I would show you, let me just hit pause on this. Yeah, so here's my trade blotter for the day. Like I said, it's always a little bit painful, right? We always see option activity on days like this too. Some of it is right, some of it is wrong. We saw some aggressive calls go up in Square. Again, the way that I use option activity is just an idea, right? Because some of it's wrong, some of it's right. And I'm glad that I took my stop here in Square because it ended up going stalled right here, which is kind of what I thought it would do. Right? I took one other shot on something on a day trade, and then I just, I took some profits on. I added a little bit of puts, which I made just a tiny bit of money on. I got out of CrowdStrike. I got out of RTX. A couple of things I actually hit targets in. In my hedge trade where I sold. A call spread, right, which is a bearish trade. I was able to buy that back for some profits today. All right, and then I picked on a couple things here at the end of the day, but overall, it's always doing some liquidation in the market once we kind of breach a support level that I'm watching. Right, the main thing also right now is I'll just give you a couple of other points here, and then I'll talk about Netflix. Is that the more disciplined that you could be in this market, the better, right? The more that I always see this on Twitter or FinTwit, as they say, the real opinionated people who act like they're confident and so forth. They always get those people have a lot of followers, right? The confidence that they exude. However, I think the majority of those people really get run over too. Unless they're really giving some good knowledge. But the more opinionated you could be in this market, the more you're going to get hurt. The more disciplined that you're going to be in this market, which is not the sexier of the two, right? The more that you're going to be able to kind of roll with the punches. I'll give you an example. This Futu, right? Yesterday went absolutely nuts. Yesterday broke out. I started to look at some upside levels. Maybe this thing could get up to 179, 188. Well, they announced a secondary. And, it was like, okay, well, maybe, it'll kind of hold in here. Nope, kept going. This thing was down 23%. So the people that I see a lot of times on Twitter are always like, oh, the diamond hands, right? And, oh, you have to have conviction and, we're going to hold, right? And then I see those same people say, this name shouldn't be down 23%, or I'm going to buy more. It's cheap, right? Those are the ones that I think that you really are going to run into issues with following. People, in my opinion, I'm being mean here, but people who you see do that type of thing on Twitter, those are the ones with the big losses, right? Because they're stubborn. Right? You cannot be stubborn when trading a market like we are experiencing right now. The more disciplined that you can be, the more that you're going to survive and advance to the next segment of the market. All right, guys, that's my little speech for today. I would say for Netflix, I think this is kind of. I know a lot of people are noticing that things are. Some things are being affected by it. It's the same thing. If Netflix was up a lot, you would see Roku and Amazon and Disney go up. Yeah, when a name drops this much, it affects some of its competitors too. So, if you like those names long term, you can think about kind of adding into that. But I don't think, I read through just very briefly. I know they really missed some numbers, but, this is kind of expected in my opinion, right? They don't have any original programming out because of COVID. One of the things, I always try to kind of speculate what they're going to say. If they don't start to say, hey, here's the next season of Ozark, here's the next season of Stranger Things, they're going to have a tough time, right? These companies need original programming. So it'll be interesting if they if they can start to outline that. You might see the dip get bought. But for me, right, I'm a subscriber to Netflix. There's got to be something that's interesting that's on, right? What's the other show? I can't think of it. But I'm not going to quit Netflix as a subscriber. But again, this is all about growth, right? So you could see streaming services misses subscriber target. That's the main that's the main story for this. So the other thing I would highlight too, because again, I try to really get people to kind of think about things. Some of the things that we picked up the last couple days, I got a lot of questions from members saying, "Hey, there's been a lot of call activity in Netflix, right? Leading up to Netflix." This is a very important point. The option flow that you see in a name leading up to earnings, sometimes they're right, sometimes they're wrong. I wish I could tell you, because people love option activity. They love it. They're like, oh, there was an aggressive call buyer in Netflix. Well, ask yourself this. With all the aggressive flow that we've seen in Netflix the last couple of days, why is it down? Why is it down? Because they don't always know. That's why. Okay, so learn from that a little bit. Again, the way that I use the option flow, I'll just repeat myself and we'll end here, is it's just an idea, right? When I see it, so basically the chain of events, when I see a call buyer in the name, what I then do is bring up the chart, look to see if it's at an interesting level, what's going on in the technicals, does it make sense for me? Never do I really think about, oh, geez, what do they know? Do they know that they're going to smash their earnings estimates? Odds are, the majority of the time, they don't know, okay? Every once in a while, they do. Like we saw a lot of Nuance Communications calls being positioned in May, right? That announced that they were being bought by Microsoft. In that situation, they did know. But I'm telling you, the majority of the time, this is, you see this type of outcome, right? Some win, some don't. All right, guys, that's it for today's recap. Again, realize, of course, coming into this week that the market was extremely overbought. So give it a chance to kind of, we also talked about, as well, that there has been no sell programs, right? I have a slide up here from, a couple, I think it was last week, and I tweeted this out. I said yeah, here it is right here, right? Algo programs larger than 1,500 names missing so far in April. Well, now we got that. So again, quite normal. It's normal to see sell programs and profit taking along the way in the market. So just keep that in mind. All right, guys. Have a great night, and I'll see you tomorrow.